Greetings, empowered investors from Bogota, Colombia. I am on my way to Lima, Peru today, and I'm in this funky airport lounge that looks rather modern and Jetson-esque. Do any of you remember the show The Jetsons? Well, here we are. This is kind of a very Jetsons-esque airport lounge. So, ever since Trump got elected, I've been talking about how America is open for business. We've got a business person running the country, and the whole vibe has completely changed. Well, now something really, really awesome and amazing is going on. Number one, there is this movement to eliminate property taxes, and Florida and Tennessee are leading the charge. Can you imagine what happens here if property taxes evaporate, if they go away? Do you know what a massive migration trend that will cause, and what an increase in values that will cause? And this kind of stuff is contagious. Other states follow suit. When one state does it, they've got to be competitive. It's a marketplace for money, right? Money goes where it's treated best. People go where they're treated best. And that's what's going to happen. So this trend, if it works in these two states, it is going to expand rapidly, and it is going to be great news for all of you. It's going to be great news for real estate investors, for new home buyers, for everybody. It'll be wonderful. And how will they pay for this? Well, I encourage you to look into it, because they have a plan. But there is something even bigger and more amazing on the horizon. So Donald Trump has said, right when he took office, he was talking about how the IRS should be eliminated and it should be replaced with the external revenue service. We've got this internal revenue service, but why not have an external revenue service? I've never heard him say it, but I've called it the ERS, right? The External Revenue Service. And what he's talking about is tariffs mainly. But he just announced another amazing, huge revenue stream that would be an absolute game changer for the country. Let me just preface this. We've talked before about golden visa programs and migration by investment programs, and we did a masterclass on that a few months ago. But why doesn't the US have a program like this? Well, Trump wants to create one, and it's called the Gold Card program, where basically the US would sell these gold cards to wealthy foreigners for $5 million. Think about it. If you just sell a small number of these, you could easily eliminate the deficit. And if you sell a bigger number of these, you could eliminate the national debt entirely. It is absolutely amazing. This is an incredible idea. It is genius. And think of the knock-on effects. Think of what Trump is really saying here. He's saying, let's charge people a big admission fee to come to the country that most people want to come to. But not only that, they're going to pay admission to come and contribute to our economy. Imagine the migration of capital that would follow these gold card holders. I almost said golden visa. Gold card holders. The migration of capital that would follow them would be staggering. The new businesses that would be funded, the new businesses that would be started, the people that would be hired, the real estate that would be purchased. This is an absolutely incredible idea. And maybe it comes along with this ERS idea of eliminating income tax. So, folks, we are at a pivotal moment in history. It is an amazing time to be alive. And you combine this with the technology that we're all experiencing, and I don't think we can even imagine the kind of prosperity that could be created from these programs and these things. Think about it. You might be thinking, well, Jason, $5 million is a drop in the bucket. But there's 8 billion people on Earth. Think of how many wealthy Chinese would love to have an American gold card. Think of how many wealthy Russians and Ukrainians that would love to have an American gold card. Think of how many wealthy Asians that would love to have an American gold card. For them, $5 million is like nothing. These other citizenship by investment programs, look at the European program, the one that gets you that really good EU citizenship, and it gets it to you pretty quickly, right? It's Malta. it's $1 million. Portugal, you're going to spend what? Now I think that's close to $500,000 for the most famous golden visa program that Portugal has become famous for. This would be incredible. People will buy it like crazy, and the capital, both monetary capital and intellectual capital that would come into the US would be staggering. The way it would drive up real estate prices, the way it would increase demand for real estate, not that we need increased demand because we have a housing shortage, as you well know, is absolutely phenomenal. Now, before we get to our guest today, which is going to be a returning guest, Kerry Lutz, he'll be back on with us in a few minutes. But I want to say two more things. Number one, a friend of mine posted on Facebook yesterday a chart, and I'll get this chart for you when I can another time. But it's a chart showing that inventory levels in Florida have been rising. And that's true. I mean, we've talked about it a lot. No big deal, right? And so all the doomers are talking about all this panic. Well, how much have they been rising? Because what is life's most important question? Compared to what? That's the most important question. Well, they've been rising, and now they are back to 2015 levels. That's what Florida looks like now. And there's all this panic. But no one bothered to consider how misleading that chart is. Why is it misleading? Because inventory needs to be compared to something. It needs to be compared to the overall population or household numbers. In 2015, the population of Florida was dramatically lower than it is today. So a chart like this is totally misleading because it should not talk about the aggregate inventory levels, which are the same as they were 10 years ago. It should talk about the per capita inventory levels or the per household inventory levels. If you do it that way, it's much lower than it was in 2015. So again, folks, if you don't just understand this basic stuff, you're going to fall prey to the doomers that are going to force you to miss out on opportunities. If you watch those channels, I mean, the media, YouTube, it's full of all these doomers that make these huge leaps in logic, and they don't really consider the proper way to evaluate statistics. So hope that's helpful to you. All right, Empowered Investor Live is coming up. You get a free ticket to Rebel Capitalist Live, which is a month later, if you buy an Empowered Investor Live ticket. And one more thing I wanted to say, I have not mentioned this before, but we have negotiated an incredible hotel deal. Our hotel room block rate is only $199 per night at this gorgeous, newly remodeled property that we've held many events at over the years. And it is just a fantastic property, freshly remodeled. It's beautiful. And you get your room for only $199 per night. So that's a great deal. So coming to this event will really not cost you very much money. And certainly compared to the knowledge you'll get, the new contacts you'll make, the new friends you'll make, the networking opportunities, the learning opportunities, and the fun opportunities, it's going to be fantastic. Maybe you want to combine it, make it a family vacation to Southern California. If you're not from the area, of course, Disneyland is right there. And that's right in my old stomping grounds where I grew up and had my the first part of my career. My big traditional real estate career was in Orange County, California. So join us for that, empoweredinvestorlive.com, empoweredinvestorlive.com. Join keynote speakers Sharon Lechter, Tom Wheelwright, and first-time speaker for us is Michael Maloney, who is an expert on monetary policy and monetary history. Fascinating guy. It's going to be a great event. So empoweredinvestorlive.com. Go there right now, get your tickets, and we will look forward to seeing you. And let's go to our guest, Kerry Lutz. And before we go, let's hear an interesting clip of the day.
This just in, after Governor Ron DeSantis stated his intention to abolish property taxes in Florida this afternoon.
These property taxes, it's like you buy a home, is it your property or not? Just for being on your property, you got to write a check to the government every year. So you're basically paying rent to the government to live on your own property.
Tennessee has followed suit with a resolution banning a statewide property tax heading to the Senate Judiciary Committee at 3 p.m. tomorrow. Senate Joint Resolution 1, sponsored by Senator Farrell Hale, seeks to amend Tennessee's constitution to prohibit any form of state property taxation. If it secures two-thirds support in both chambers, Tennesseans will vote on it next year. Meanwhile, Florida's plan, backed by Governor DeSantis, would make it the first state in the nation to eliminate property taxes if approved this year. Senator Jonathan Martin filed SB 852, calling for a study on replacing property tax revenue with budget cuts and potential sales tax increases. Since Florida has no income tax, the study will assess how eliminating property taxes could affect schools, parks, and emergency services. Both Tennessee and Florida's efforts mark a significant shift in reshaping America.
It is my pleasure to welcome a returning guest back to the show. You've heard him on many times, and that is none other than Kerry Lutz, the founder of the Financial Survival Network, and he is here to discuss and decode what is going on in today's markets, in the economy, and maybe a little bit about the political environment as well. Kerry, welcome back. How are you?
Doing great. It's great to be back on the show with you, Jason.
It's good to have you. So let's dive in first to your thoughts on the economy. We're in a new year. We've got a new presidential administration, a lot of stuff going on, rapid changes. What can we expect this year?
I had lunch with Martin Armstrong a couple of weeks ago, and he is adamant that the country's going into a recession because the world's in a recession, and we've just been so distracted in this country that nobody knows it. If we are really going into a recession, and I'm not convinced of it, then got to believe that interest rates will go down, but the debt's going up, and it's going to be a real mess. This would be the worst possible time to go into a recession.
So just out of curiosity, Martin Armstrong's been on the show a few times before. I know you know him well. He's got some really interesting thoughts on things, and also a computer program that predicts the economy and predicts various markets. So why does he think we're going into a recession? I mean, we do have high interest rates. Well, they're not high historically, but they're high recent history-wise. You know, the labor market is very strong. What makes us go into a recession? You know, holiday spending for retailers was fantastic. I mean, you know, set a record. Where's the recession coming from?
I think that he sees the so-called Trump bump as just being short-lived.
Okay.
And, you know, I didn't really get into him with it, but that's what the computer says. We're going into a recession, and that's what he's repeating. But like I say, I would make the argument we've been in a recession for the past 2 years, because remember, the former administration redefined the definition of recession and said as long as the job numbers are good, then you can't be in a recession. But you and I both know that that's like just not so.
You just reminded me of Reagan's famous quote. And by the way, I think the current president might actually set the record for being a better president than Reagan. And I liked Reagan pretty well. He made some mistakes, but we'll get into the political thing in a moment here. But he said, you know, a recession is when your neighbor loses his job. A depression is when you lose your job. That's a funny quote.
Yeah.
And nobody's losing their job. I mean, the employment numbers are holding very well. So, you know, it's kind of hard to say that, but I know it's uneven, right? And homeowners have record amounts of equity. They're very comfortable. If they got their loans over 2 years ago, they're extremely comfortable. So, you know, it's not like you can predict a real estate crash very well. You know, and I just like dive into that more. Like, why have we been in a recession in the past 2 years in your eyes?
Well, because we've had negative GDP growth and inflation is understated. So whatever growth the numbers appear to be reflecting is overstated, because, you know, you have this thing called the GDP inflation deflator index. And if the inflation is measured at 3%, then you take that and you deduct that from GDP, 3% of it, and you compare them year over year. And if you're up 1%, then the economy's growing and you're not in a recession. Right. But if you say the inflation rate is 3%, but it's really 5 or 7, then you had major negative growth. You had contraction, and you're in a recession, and the definition is 2 consecutive quarters of negative growth or contraction, and you're in a recession.
Yeah.
So, we've
and
been
and the
recession.
committee needs to
Yeah.
declare the recession,
Right.
which is so ridiculous. I've talked about that on prior shows, so we won't go into it today. But okay, so in a recession, if we've been in one, if we're going into one, can we still see asset prices increase in the recessionary time? Yeah.
Of course, because the only way they'll get us out of a recession is printing more money.
Right. And inflating the bubble more.
Yeah. Look, if they take if Doge is a success, I know we're not talking politics yet, but just hypothetically, it's a success, and they save us $500 billion that the government doesn't have to spend or borrow, quote unquote, borrow or print out of thin air. That is very deflationary. And what we've seen in the past is we have these major recessions now when credit markets melt down for one reason or another, like 2008-9, that was led by credit contraction. And if you go back over the last 3 or 4 recessions, they have all been caused by credit contraction, or what you would say a credit bust.
Yeah, it's interesting that you mentioned that, because I was recently, as you know, in Bangkok, Thailand, and I met with Richard Duncan in person, and I did a very long in-person interview with him that we just published a week ago. And his latest book is all about creditism, as he calls it.
Yes.
And I completely agree with you. During the Great Recession, everybody was focused on money supply, but they weren't focused on credit supply. And those two together really make the real money supply, in my opinion, and I know you agree with that. So it's a very good point that you make. So do you think we'll see a significant credit contraction? And by the way, we've got to sort of dice that up too, because one idea of credit contraction would be just higher rates, right? But the other idea of credit contraction would be availability of money at all, regardless of the rate. So in the real estate world, the Mortgage Bankers Association publishes an index, which is the Mortgage Credit Availability Index, the MCAI, which you may be familiar with. Talk to us about those different aspects of credit supply.
Yeah. We've been in this recession, all right, for 2-3 years now, since inflation kicked up. And at the same time, we got higher interest rates, which is like the worst thing you do. But inflation is kicking up, and that's the only tool in their arsenal left. That's all they have is printing money, or print less of it, but they're still printing it. On the other hand, the president has indicated he's going to be pressuring Jerome Powell to lower interest rates. How much will they really be able to lower them? They cut them 50 basis points before the election. You could question their motivation, but they did it. But that was the only cut that we saw for like the past year. So if we get some cuts, maybe they can offset some of the credit contraction that could otherwise take place.
That's an interesting point. And, if you look at the mortgage world, that seems to be extremely sound. But if you look at auto financing, auto loans, for example, I'm no expert on it, but I'm reading that looks like a problem area. And, other areas of credit as well, just like consumer credit, credit cards, et cetera. Any thoughts on those?
Yeah, well, we've been watching a slow kind of meltdown of auto lending. We've got subprime auto lending. Delinquencies are up for autos, for credit cards. So consumer credit, not the best shape. We still got a lot of retailers going out of business. You don't see a lot of new ones opening. I can see the argument for it. On the other hand, the military industrial complex is booming. But if we settle a couple of wars, that's not going to be a real good sector to be in either. A big source of profits there. The military industrial complex loves wars.
Right.
They make more in 1 month of war than they make in 10 years of peace.
Yeah, exactly. I've said the same thing. As long as war is profitable, there will never be peace. And the central banks have a lot to blame for that, because the banksters in general, because they're financing the wars, so it's just terrible. It's awful.
We're financing it through lower purchasing power of the dollar.
Right.
That's what it's about. Interesting. Martin Armstrong said, 70% of our debt is interest, which means we're paying interest on interest.
Yep.
So something's got to give. Enthusiastic about cryptos, though, but not all of them, because most of them are what I call kleptocurrencies.
Yep. I like that.
Hey, man, I wish I had bought Melania coins and Donald coins and, Make America Great Again coins.
Yeah.
But the fact that they just boom out of nowhere is pretty amazing. Like when they released the Trump coin, I guess you could be outraged that he made billions of dollars. On the other hand, it was before he got sworn in, and he had no idea that the things were going to go up that much in price. But his enthusiastic endorsement of Bitcoin. Are you aware, Jason, that we already have a strategic Bitcoin reserve?
I know that the
US
government owns a small amount of Bitcoin, but they haven't formally called it a strategic reserve yet, and it's not in the amount that the Bitcoin, the crypto bros want to see it in. But
not that small.
Yeah.
They own 213,000 Bitcoins. The last I looked, 15.2 or 15.7 billion in Bitcoin. You know where they got it from?
Seizing it, right? They got it
from Ross Ulbricht.
Yeah. Right, yeah. Who's now out of jail, thankfully. Which, I think he should have served some time in prison, which he did, but not 240 years. That was insane. for that, and that's the guy behind Silk Road. We all probably saw the movie. It was a great movie, by the way. If you haven't seen it, it's very interesting. He definitely committed a crime, but it's not a 240-year crime. Okay. Yeah.
He could have been bunkmates with Sam Bankman-Fried,
So, Kerry, what are your thoughts on the real estate market for the coming year or so?
Well, we've talked about inflation. It doesn't just go away because they wave a magic wand. The Trump saying we're going to lower energy prices, and that's going to lead to lower inflation. Look, Milton Friedman said it like 100 years ago. Inflation is first and foremost always a monetary phenomena, right? So it has nothing to do with the underlying prices of commodities. It's got to do with the value of the currency.
Right.
Yep. Now, you can have situations like when Spain conquered the New World and they shipped back so much gold that gold actually lost its value because of the quantity of gold was so much higher. Okay, that can happen, we're on a commodity-based money supply, but ours is a credit-based money supply. Every dollar that exists is borrowed into existence. So to think that inflation will just go away, if we have a massive depression or a very, very deep recession, it will go down substantially. But everything they do, printing more money, is to avoid that scenario. So to think that inflation is just going to disappear because they wave a magic wand or energy prices go down is just not going to happen. Energy prices could be 10, 15% of the total inputs in the economy. So if you knock it down 20%, you save 2 to 3%. That's just not going to work.
Right. So just to clarify your point, which is a great point, by the way, energy prices go down. I mean, the cost of energy is in everything. So we bring energy prices down. It does help bring inflation down a little bit. But again, it's not a magic wand. It's not a panacea. It shaves a little bit off maybe, but again, not significant.
Yeah, exactly. So if you don't address the cause, that's like you got a brain tumor and you go to the doctor and he gives you two aspirin and tells you to call him in the morning. Right. It's not going to be effective. On the other hand, if the government can, there's got to be a restructuring that takes place. Armstrong, he's in favor of a debt to equity swap, where basically you take all the government debt and then you could buy stocks with it. And that's all you could do with it. And everybody gets these certificates that are good for buying shares.
Oh, that's interesting. You got to explain that more. What do you mean? You take all the government debt and you give it to the people so they can buy stocks?
Yeah, give it to them and say, go buy stocks with it, basically, is what he's saying. Debt to equity swap. Like what happens in a bankruptcy where a company goes bankrupt, Chapter 11, but it's going to continue in operation. the equity holders get wiped out. The creditors wind up owning the company effectively.
Right,
So-
but giving people $34 trillion or $36 trillion worth of stock vouchers
I
does
don't
not
think you give
pay
it to
the
them all.
government debt. I mean,
I don't think you give it to them all at once. You know.
right,
This
but
is
how does that pay the debt? I don't get that. If we owe
Good.
if we owe $1 trillion to China, how does giving U.S. citizens stock vouchers pay China's debt?
Yeah, well, you don't have to get rid of all of it necessarily. You want to give it to people to get them to waive their future entitlements.
Oh, you're saying trade it for all the owners of treasuries would
Yeah.
get stock vouchers instead
Right.
of their treasury
Exactly.
certificates. Okay, got it.
Exactly. Yeah.
Okay.
So that's his concept. I don't
To buy
know.
stocks in American companies or at least on American exchanges.
Yeah. I don't think it's workable, but
That's a really interesting idea. I don't think that's.
he seems to think so.
Yeah, that's
And like Milton Friedman said years ago, the way you end Social Security is you give people bonds. Then they could sell those bonds or hold them to maturity or whatever. But, you know, I don't know how you do that with people on Medicare and Medicaid. So how
well,
do
they'd have to trade those bonds with their doctor, I guess.
Yeah,
you know.
they pay them in bonds. I mean, hey, if
But-
RFK is successful and he makes America healthy again, we won't have to worry about it.
Right. We'll have a lot less load on the medical system, which is a complete disaster. Okay, so I know you've got to run, but any final comments on where the economy is going, where the real estate market is going? You know, any
They
thoughts?
were in for a ride, man. I think real estate will hold up even in a recession in select markets. But if these mass deportations, if they really take off like we're thinking here, that's going to have an effect on the real estate market,
Oh
right?
yeah. I agree. At the very low end real estate market, definitely. I think you are going to see some people leaving the country, and I think long term that's good for the country and the economy, and keeping costs down and deficits down. It's very good. It's what we need to do, but it's not going to be without some short term pain.
Yeah, well, you know, the rule of law is more important than short-term economic gains or pain.
Couldn't
right?
agree more.
So it's going to be an interesting period of time here.
It certainly is. Kerry, give out your website. Tell people where they can find out more.
Of course, financialsurvivalnetwork.com. Everything that I've ever done is on that site. All 9,000 podcasts are archived there, 9,000 plus at this point. And sign up for your free newsletter. We shoot it out. Over 65,000 of you have so far. And we got good stuff in it for you.
Good stuff. Kerry Lutz, thanks for joining us.